medical centers. Now, some of this is due to automation there, and also outside contracting. That's something we don't talk about. I don't get a number on that. Employment information increased by 12,000 with gains of 5,000. Telecommunications over the year, employment and information has shown little net change. Mining rose by 9,000, with the majority of the increase occurring in support activities for mining. 7,000 over the year. Mining has added 50,000 jobs within leisure and hospitality. Employment in food service, drinking places continue to trend up. 20,000. It's up by 290,000 over the year. I think I mentioned last time I talked to a bartender that the best years, according to him, in that business was in the 80s and in the 90s. Employment in financial activities continued to trend up in September. 12,000 added that, and an additional 889,000 jobs over the year. In September, job growth occurred in insurance carriers and related activities. 6,000 there. In security, commodity contracts and investments. 5,000 there. Employment in other major industries, including manufacturing, wholesale trade, transportation, warehousing, government, showed little change there. September, the average work week for all workers, this is in private non-farm payroll, edged up 1/10 of an hour to 34.6 hours. Manufacturing work week was unchanged at 40.9. I was talking with another worker, a bus driver on the T, that a lot of the routes have built-in overtime. Factory overtime edged up 1/10 of an hour to 3.5 hours. You're seeing some of this because they're not adding additional workers. They are just adding hours to the workers that are already in place. The average work week for production and non-supervisory workers on private non-payrolls edged up by 1/10 to 33.7. Average hour earnings for all workers on private non-payroll are $24.53. The fast food workers are still struggling to get $10 or $15 an hour. And that was little change there. It was minus 1 penny. The average earnings has risen by 2%. In September, the hourly earning of private sector production and non-supervisory workers was unchanged at $20.67. The change in total non-farm employment for July was revised from 212,000 to 243,000. The change for August was revised from 142,000 to 180,000. Not as dismal. With these revisions, unemployment gains in July and August combined were 69,000 more than previously reported. That's not unusual because in the summer there's a lot of transition things going on here. Now let us move on to had more than one chart here. We want to move on now to, we need to get the other one up in just a second here. The U.S. Census Bureau and U.S. and Bureau of Economic Analysis here. This is international trade in goods and services for August of 2007. The goods deficit increased by 110 billion from 59.9 billion. The service surplus increased at 3/10 billion to 19.8 billion. Export of goods increased 1/10 billion to 138.8 billion. Imports of goods increased 1/10 billion to 198.7 billion. Exports of services increased 4/10 to 59.6 billion. That's exports. Excuse me. Imports increased to 39.9 billion. Goods and services deficit increased 0.6 billion from August 2013 to August 2014. Exports were up 7.9 billion, or 4.1%. Imports were up 8.4 billion, or 3.7%. The July to August increase in export goods reflected an increase in capital goods at 1 billion, consumer goods at 0.8 billion, industrial supply material at 0.7, and other materials at 0.4. Decrease occurred in automobile vehicles, parts, and engines. Food, feed, and beverage at 0.6. August to July increase in import goods reflected an increase in capital goods at 1.8 billion, and consumer goods at 0.7 billion. Decrease occurred in automobile. We talked about that. 1.4 billion. Others at 0.6 billion. Food and beverage at 0.3 billion, and industrial supplies and materials at 0.2. The August 2013-2014 increase in exports reflected an increase in capital goods at 2.4 billion, consumer goods at 1.6 billion, industrial supplies and materials at 1.4 billion, others at 0.8 billion. And let's get down to services. Export of services increased 0.4 billion from July to August. The increase mostly reflected an increase in transportation, 0.2 billion, which includes freight and port services and passenger fares, and in travel, for all purposes, all education, 0.1 billion. Changes in other categories of service export are relatively small. Imports of service increased 0.1 billion from July to August. Increase reflects a 0.1 billion. Other businesses, 0.1 billion, were partially offset by decrease in charges for use of intellectual properties at 0.1 billion, which in July included payment for rights to broadcast the 2014 Soccer World Cup. So World Cup plays into this, more internationalized economy into broadcasting rights. Selected, not seasonally adjusted good details. The August figures shows a surplus in billions of dollars, with Hong Kong at 2.8 billion. Australia, and there's a protest going on in Australia at 1.4 billion, and Singapore at 1 billion. Brazil at 1 billion. Deficits were recorded in billions of dollars, with China at 0.2, and the European Union at 11. Germany at 7.1, Japan at 4.7, OPEC, we don't hear much about them, at 3.2, Canada at 2.3, Ireland at 2.2, India at 1.9, South Korea at 1.8, Saudi Arabia at 1.5, and Venezuela at 1.3. Advanced technology products exports were at 28.9 billion in August, imports at 34.4 billion, resulting in a deficit of 4.5 billion. August exports were 1.7 billion, more than 27.1 billion in July. And here's some revisions here. We'll get to this lastly. For July, exports of goods were revised up to 0.2 billion. Imports of goods were revised down to 0.3 billion. Goods carryover in August was 0.1 billion, or 0.1%. Balance of payments basis, that's the seasonally adjusted. July exports of goods were revised up to 0.2 billion. Imports of goods were revised down to 0.2 billion. And let's see what else here. For July, export of services were revised down 0.2 billion, mainly reflecting downward revenues in travel for all purposes, including education and financial services. So this does that part of the picture up. Let's go to the market people here. This is their market U.S. services PMI. Strong rise in service sector activity in September, but the rate of growth eased to a 4-month low. September's data highlights a continual strong upturn in U.S. service sector business activity, despite the pace of expansion easing slightly since August. It's to its at least marked for 4 months. Meanwhile, business volume rose at a sharp and accelerated pace, which combined to a faster accumulation of unfinished work since the survey began 5 years ago. Greater workloads and more robust confidence towards the business outlook supported a solid increase, and we've seen this the last few months. At 58.9 in September, down 59.5 in August. Seasonally adjusted final market services business activity index signal that output growth continues to moderate from June's survey record of 61. That's very good. Needlessly, the reading is well above 50, which we expect it to be. In overall business since June, there's a further acceleration of backlog of work within the service sector. Moreover, the latest data indicates that work in hand but not yet completed rose the most marked pace since 2009. You'll hear that number reappear, and President Obama talked about that also. Meanwhile, input price increased across the service sector in September, but at the rate of cost inflation eased since the previous month and remains slower than the survey's average. Companies that reported a rise in their cost burdens generally cited higher salary payments and greater food prices. As a result, the average tariff increased in September, and the rate of output changed. Inflation picked up to a 5-month high. Looking ahead, the service producers indicate the strongest degree of business activity. Around half of the survey participants an increase in business activity next 12 months. Only 5 noted that would not. Activity across the sector. Seasonally adjusted final market PMI outlook index composite, covering manufacturing and services, posted 50 in September. The flash was 58.8, down from 59.7, the lowest in 7 months. Not unusual for this type of year. It's kind of a transition period in September, and people start looking to the quote-unquote holiday season once we're in October and then, of course, November. And the holiday season in the U.S., or at least the holiday buying season for the retail market, starts earlier and earlier. It used to start after the American Thanksgiving. Now it starts before the American Thanksgiving and goes merry into December. The latest index still points to a strong pace of output expansion and supports rises both in manufacturing, the index 59.6, and services 58 there. Higher levels of service sector activity were supported by the fastest rate in new work since June. Anecdotal evidence from survey respondents suggests that strengthening domestic economy conditions have boosted both business and consumer expectations. Now, this is one of the things that's happening here, and it's exacerbated by the political cycle. In November, there's an election in the U.S., And there are ads 24/7 on cable and local